Over the past few days, I spent hours upon hours scrolling through endless indicators on TradingView, trying to find a strategy that can accurately predict trend reversals. And boy did I find some really good strategies. But of all the strategies that I discovered, well, let's just say the one I'm gonna be showcasing in this video is by far the best. Stay tuned, because we're gonna go over what this strategy is, all the indicators needed to make it work, as well as the entry and exit conditions. Now, let's begin by adding all the indicators needed for this strategy. To do that, you want to load the 15-minute time frame of Ethereum against the US dollar. But you're not going to be limited to this, because this strategy can actually work on any trading security as long as the time frame is 15 minutes or under. After that, you're going to click on indicators. Now, the main indicator of this strategy is called Bollinger Band. Type that in. And we're gonna click on it twice because we need 2 copies of this indicator. Then we also need to add a volume indicator called Hawkeye Volume. This one by Nanda86. Now, the next thing that we need to do is to change the settings. So access the settings of the first Bollinger Band indicator. Then you want to change the standard deviation value to 1.75. Then head over to the Style tab, and then here you want to disable the basis and change the color of the upper and lower bands to red. After that, click OK. For the second Bollinger Band indicator, we're going to change the standard deviation value to 3. After that, we don't need to change anything else, so click OK. Lastly, double-click on the Hawkeye Volume indicator, and then on the Style tab, you want to change Color Zero's opacity to 0%. I'm also going to change the plot color to white. I'm also going to reduce the thickness of it, disable the spikes option, and we're done. Now, as you can see, we have 3 indicators on our chart, 2 copies of the Bollinger Band indicator, and a volume indicator. I think by now that most of you know what a volume indicator is used for. It's right there in the name. It's used to track volume in the market. Volume is important in trading because it provides insights into the strength and potential sustainability of price movements. How this indicator works is really simple. These green histogram bars represent bullish volume, and these red histogram bars represent bearish volume. This white line is a volume-based moving average. Whenever these histogram bars are above the moving average, it indicates that the volume in the market is high enough. And that is what we're gonna be looking for before we take long or short positions. Now, what about these 2 indicators? What are we going to be using them for? Well, these are basically the core indicators of this strategy. And we're going to be using them to identify extreme areas where the price might be bound for trend reversals. So like here, this was a bearish trend. After the bearish trend, right here, price touched the lower band of one of our Bollinger Bands indicator, which is this blue line at the bottom. Once that happened, we can see a trend reversal to the upside. And then at the top, it touched the upper band of our second Bollinger Band indicator, which is this blue line, and we get this small reversal to the downside. And then during consolidating markets, you can see that the price is going to be confined inside the red Bollinger Bands. It eventually managed to touch the lower band of the blue Bollinger Band indicator, and we got this movement to the upside. Same thing happened here, a small consolidation and an eventual move to the upside. Got close to the upper band, which triggered the price to move down. And down here, after touching the lower band, we got this strong bullish push. This is exactly how our strategy is going to look like. We're not going to be looking for super big movements. Instead, we're going to be focusing on those small scalps that cover only a few pips per trade. Next, we're going to go over the entry and exit conditions for this strategy. So how do we take a long position? Well, let me show you.